Is the artificial intelligence boom heading for a major reality check? While AI chip stocks recently celebrated a historic 88% surge, a silent alarm has been blaring in the commodities market, warning investors that a significant correction could be on the horizon. If you've been tempted to heavily increase your investments at these recent peaks, you might want to hit pause. In this video, we're breaking down the critical data every investor needs to see to protect their portfolio, and the key indicators that will reveal where the market is actually heading next. The artificial intelligence chip sector has hit a sudden roadblock in the second half of the year. After a historic second quarter surge of nearly 88%, the Philadelphia Semiconductor Index, or SOX, plummeted over 13% in just the first 4 trading days of July. The trigger for this massive shakeup? Reports that Meta plans to lease or sell its surplus AI computing power. This news shattered the market's illusion of an infinite computing shortage, sparking deep anxieties about peaking global AI capital expenditures and potential overcapacity. Driven by valuation pressures, speculative capital is aggressively fleeing AI hardware giants like NVIDIA and Micron. Even Morgan Stanley has issued a clear warning to underweight the semiconductor sector.
This warning isn't just alarmist talk. International silver prices, which share a deeply intertwined relationship with semiconductor stocks, have already sounded the alarm. After hitting a record high of over $120 in January, spot silver plunged over 54% to a low of $55 in June. This massive collapse suggests that the overheated AI hardware supply chain may follow a very similar path of mean reversion. As the metal with the highest electrical and thermal conductivity, silver is a core component in high-performance electronics, widely used in printed circuit boards, semiconductor wire bonding, and advanced switches. Today, silver is no longer just a byproduct of gold. Over 50% of its demand comes from industrial applications. From AI servers to electric vehicles, it has become an indispensable element driving the fourth industrial revolution. Historically, spot silver prices and the SOX index, lagged by 4 months, share an incredibly close correlation of 0.955. This makes silver a highly valuable leading indicator for AI chip stocks. Based on this trajectory, silver's 50% haircut suggests that the recent 18% drop in the SOX index from its June peak might just be the opening act of a larger storm. If semiconductor stocks fully replicate this commodity down cycle, the potential downside could far exceed market expectations. Looking at the SOX index, it has shed nearly 16% from its June high, but it has only broken below its 50-day moving average. Given that past maximum drawdowns can reach 30 to 40%, it's hard to say we've hit bottom, meaning there could be more room to fall. However, because the current correction hasn't breached historic worst-case scenarios, calling this the burst of the AI bubble is premature. In fact, the Dow Jones recently hit a new high, signaling that traditional sectors remain favored. Furthermore, equal-weighted indexes and the Russell 2000 hit historic peaks between late June and early July. This suggests that the recent tech weakness is simply a capital rotation rather than the end of the bull market. A key indicator for a short-term tech rebound lies with SK Hynix. The South Korean AI memory chip giant is listing its American depository receipts on the Nasdaq on July 10th. This follows SpaceX's high-profile move, and if giants like OpenAI and Anthropic follow suit with their own listings, Wall Street will comfortably secure its crown for global fundraising. The second quarter AI boom was heavily driven by memory chip stocks, with SK Hynix being a dominant player. Its performance in the U.S. market will serve as a critical gauge of investor sentiment. While Micron and Samsung recently reported stellar earnings, their stock rallies failed to sustain momentum, proving that previous hype had overextended valuations. Whether the current 20 to 30% pullback from recent highs is enough to absorb the selling pressure depends largely on how SK Hynix trades. Known for high leverage and high volatility in the Korean market, SK Hynix's entry into Wall Street is bound to create massive swings, making it a prime target for speculators. Plus, with the company set to report earnings on July 23rd, expect plenty of volatility and headlines in the weeks ahead.
Understanding the market is just step one. If you want to transform this insight into actual earnings, make sure to subscribe. We have a lot more investment strategies and personal finance tips coming your way. See you in the next video.